Welcome back to Lunch of the Market. We are taking a look at a trade that we just put on, I don't know, probably 30 minutes ago. This is a call spread risk reversal in Akamai. Okay, you're going to notice that this is a whole lot like our Goldman Sachs trade. Well, that's because it actually is almost exactly the same kind of trade that we put on for Goldman Sachs. This is a call spread risk reversal. So what do? You see we have three strike prices. We've got January 2012 55 strike call, January 2012 45 strike call, and then a January 2012 40 strike put. Okay, so the risk reversal part is the short January 2012 40 put and the long January 2012 45 strike call. Okay, how are we profitable? Obviously, with just that trade right there, you're profitable as long as the stock stays above that 45 strike level, okay, long into 2012. Now, that's quite a while. It's probably close to 500 days long for that trade. So what we did was, to make it an instant winner, we sold the put against it, the 40 strike put, and we actually took in, for this entire structure, we took in $2.20. So right off the bat, we're profitable on the trade. Okay, that means if all Akamai does is stay above that 40 strike put by January 2012 expiration, we're going to collect $220 per spread that we put on. Okay, what's our max profit? Well, our max profit is all the way up to the January 2012 55 strike call. You see that one down there on the bottom? That's where we make our max profit. Okay, the max profit on that spread is $10 plus the $2.20 that we took in to put on the trade. So you're looking at a possible upside of, what is that? $12.20. Okay, not bad at all. So you're going to take in $1,220 for each one of these spreads. Okay, we are definitely bullish on Akamai. You don't necessarily have to wait all the way until 2012. There's talk right now that somebody like Hewlett-Packard will actually go after and purchase Akamai once the new CEO has been in there for a little bit. That's an ideal scenario in which Akamai trades up to, say, 60 or 70 or wherever they put in the bid to take it out at. If not, we think Akamai is powerful enough that it's going to trade upwards from here. And we really didn't want to just get naked long the stock, because obviously there's a lot of risk to the downside if that happens. So we actually have protection all the way to $37.80 because we took in $2.20 to put the trade on to begin with. So that's our trade structure. It's a call spread risk reversal for January 2012 in Akamai, ticker symbol AKAM. All right, we'll take a real quick look at our other names, right? Our frequently traded names that we have. Goldman Sachs, it's actually behaving quite nicely. We only have 2 days until Friday's expiration. And Goldman Sachs, remember, we have an iron condor on, so we're actually short at 145 on the put side, and we're short at 155 on the call side. And Goldman Sachs is trading right around that 155, just under the 155 level. As long as that holds that into expiration, really, if it stays within 30 cents of the 155 strike, we'll be able to buy back those short call spreads on the upside and really leave the trade unscathed. Then all that leaves us is the stuff that we have on in April of next year. That expires in April of next year. We're short some put spreads. Okay, CRE is at 54.50. We are still short the 55.45 put spreads in CRE. Those are going to go down to, if the expiration was today and the stock closed at 54.50, those spreads are going to go down to 50 cents. All the time value will be removed, and we'll be left with only intrinsic value, which is 50 cents. So we can buy those back and close it. We may consider rolling down and out to the next month, because we are a long-term believer in the CRE story. Salesforce.com, obviously, if we would have just had some hair in our chest and stayed in the trade long enough, we would be back in the green on those short 105.95 put spreads. But we did the prudent thing, and we rolled down and out to November. So we're short the 190 put spreads in November. The stock's at 108.57. Clearly, it has gone back in our favor. All right, our Netflix short 150s and 145s. We're totally in the clear. We got 2 days left on those things. As long as it stays above 150, we are butter and golden. So it's really been a terrific expiration for us. Hopefully you're able to jump in and add to those we went ahead and added the short 95.90 put spreads in Salesforce.com, which is the CRM. We went ahead and added those to our trade. Those are definitely looking really, really good about expiring worthless. Okay, Goldman Sachs 154.80, so we're butter there. The time value is going to really get sucked out of this thing in the next couple days. Hope that helps with your trading. As always, if you have specific questions about specific names, mention us on Twitter, and we'll go ahead and throw those into the video. Thanks so much for tuning in today. Enjoy that Akamai risk reversal trade. Oh, sorry, we'll get the screen going straight there. Enjoy the Akamai risk reversal trade, and we will see you again tomorrow.